Very warm welcome to our learners and other interested parties to this audit class, online class, I should say. My name's Ngandalo Joseph, and I hope that everything is okay with you. Today I want to focus on tests of controls. I'm going to look at the major systems of a business setup, an economic resource, so to speak. You're going to look at the sales system, purchases system, inventory system, the cash system, the payroll system, as well as issues to deal with capital expenditure. It's very important in our discussion to appreciate three issues as we get on into it. Control objective, this is what a control is trying to achieve. Existing controls, of course, controls are simply safeguards, measures put in place by managers to preserve value or shareholders' wealth. Tests of controls, this looks at audit procedures undertaken by the auditor aimed at obtaining, evidence. And so we start with your sales cycle. A basic sales, sales cycle. And I just wanted us to observe something. That is, when you're going to make a sale, there has to be a demand that a customer be supplied. We call that purchase order. So an order will be received by yourselves, and if a customer qualifies, you're going to dispatch the goods, and after the delivery is done, you're going to demand for a payment, that is invoice. Then you're going to account for the transaction in your books of accounts, and then you're going to finally close when you receive your money. Now, we want to appreciate that when you set up controls, there are certain things that you want to achieve, that is, under sales internal control objectives. Under ordering and granting of credits, you want to make sure that sales are only made to qualifying clients who are able to pay. You want to ensure that payments are received on time. That is the reason why prompt invoicing is very important. You want to ensure that orders are correct, made to the correct clients, and that these orders are fulfilled. Under dispatch, the objectives are that all dispatches are recorded and that invoicing is correct and for goods that have been supplied in the past. Remember, invoicing is simply demanding for payment to be made, and therefore we can't demand that payment be made for goods that were not supplied. And then credit notes are normally, raised when clients ask that you reduce the amount of the invoice because maybe you oversupplied or there's a mistake on your invoice. We see on our objectives under accounting, you want to ensure that transactions are recorded in the correct accounts, that is classification, and that there is also respect for accruals, that is transactions are recorded rather in the correct accounting period. We want to ensure that the recoverable dates are correctly dealt with. All right, now what are some of the generic internal controls that we need to see under the sales system? Number one, there must be segregation of duties. There must be separation of roles. Okay, so the individual who deals with, who qualifies for, credit supply should be different from the person who invoices and the person who dispatches the goods. There must be separation of roles. All right, segregation of roles, that is segregation of duties. Authorization of credit, supplies must be prioritized. Checks must be made. Referencing should be done in order for us to avoid, dealing with poor quality clients. Sequential numbering of Pre-printed order forms is very crucial here. Remember, you don't want to fail to fulfill an order because invoice numbers or source document numbers are not sequentially, numbered, or the sequence is not being followed at all. Okay, you want also to make sure that customers are charged the right price. This is what we call pricing. Remember, if we overcharge our clients, they will take business elsewhere, and that will be a problem because we'll be losing business. Okay, we need to match orders to dispatch notes. All right, we need also to deal with customer queries, and of course we can deal with that if we have got proper records. Okay, under dispatch and invoicing, we need to ensure that all dispatches to customers, clients are duly authorized. There must be examination of goods dispatched for quality. Remember, customers may demand that goods be returned because they are of poor quality. There must be recording of goods outwards. Remember, this also is connected to inventory control in a warehouse. You need to match dispatch notes to orders received or indeed the invoice. Okay, sequential numbering of printed dispatch notes is very crucial so that you ensure that you fulfill set orders. There must be signature of customer on delivery notes so that customers confirm that goods were actually received. Okay, there must be authorization of price on invoice, and this must be done, in accordance with the approved price list by managers. And you should also check your invoices for accuracy, that is arithmetic checks. Okay, under accounting, recording and credit control, we must again ensure the segregation of duties. There must be recording of sales. Those who are doing recording of sales should be different from those who are issuing statements, that is reminders of outstanding, invoices. We need to record the sales invoices in a sequential order. There must be matching of cash receipts with invoices to ensure that payments received are complete. We want to ensure that we receive the right amounts from our clients. There must be retention of customer remittance advices. So when customers pay, they will indicate to us what they are paying for. So we need to ensure that the remittance advices are compared against our, own records. Now, what does the auditor do under this one? Tests of controls. Make sure that you make references, to the following. Ensure that the client, makes references to what we call, credit referencing before supply is made, so that the client avoids supplying goods or services to clients who cannot pay, their own clients who cannot pay. There must be authorization of credit sales, especially here. There must be also adherence to credit limits. Remember, when it comes to credit sales, we can't exceed certain limits, otherwise we will incur huge losses. There must be matching of orders. Review that orders are matched against other source documents, sales orders compared against purchase order. All right, you need to verify matching of sales invoices with dispatch notes. Ensure that that is done so that you don't supply the wrong goods. That can be checked by the auditor, of course. You need to test a numerical sequence of records, and if there's any gap as an auditor, you need to make sure that you make inquiries. Observe the quality inspection or inspect documentary evidence of inspections. This is very important for you, the auditor, so that you can see to it that the client pays attention to issues of quality. Review invoices for evidence of arithmetic checks. Okay, so remember what we said, that invoices must be accurate, and so it's your responsibility as an auditor to check that is being followed. Review entries in the ledger under accounting. Review entries in ledger to scrutinize for credit limits, and then inspect whether reconciliations are being done and they're done accordingly. I want us to go now to purchases. So again, under your purchases, you have got similar, process compared to the sales, because in this case you're the ones who are selling. So we're going again to look at this. Orders must be made, then goods will be received, and then you will receive an invoice. The transaction should be recorded in the books of accounts, and then payment must be made. Okay, now what are some of the control objectives and internal control objectives under purchases? We have got the following under ordering. Purchase order rather are supposed to be duly authorized and are supposed to pertain or relate to the company. Next, purchase orders, or indeed these purchases, must be authorized, okay, and they should relate to that approved supplier list that you have. And the amounts of purchases must be economical. Remember, companies must not lose value unnecessarily. Okay, under receipts, we still under objectives. We should only accept, purchases for authorized orders, and then these should be accurately recorded. Under receipts and invoices, liabilities should be recognized for goods that have been received, and then credits. These should be duly claimed. Remember that if you are oversupplied or indeed you are overcharged, you need to claim for your credit. Under accounting, again, we should ensure that expenditure is only for received goods. This is what the controls are trying to achieve. Under purchases, expenditure should be duly authorized, and this expenditure should be properly recorded in the correct account in the correct accounting periods. Okay, so now what are some of the internal controls that we should see in the purchases system? Under ordering, there must be segregation of duties. So no individual is supposed to, start and complete a purchase process. Requisition and ordering must be done by different individuals. It is advisable or encouraged to have a central policy for choice of supplier. So meaning that all purchases must be centrally, done. Use of pre-numbered purchase requisition is very important here to ensure that we don't run out of, let's say, goods. We need to make sure that we track all our, purchases. Then under ordering, what are the controls? All orders must be duly authorized, pre-numbered, on the, right or appropriate documentation. There must be monitoring of supplier terms for most favorable, meaning that we must negotiate, at least the company should be able to negotiate for longer payment periods. When goods are received, we must examine goods inwards and record deliveries and ensure that the goods that are being received were the ones that were ordered. You need to compare goods received notes with purchase orders. We must make reference to supplier invoices. Again, this could be helpful to ensure that we're not being over-invoiced. The company is not being over-invoiced. We must check, there must be a check rather, on supplier invoices for accuracy, marks, prices, quantities, and all those. Then there must be also an appreciation of segregation of duties under accounting. We're still under controls, by the way. Somebody must record the purchase and another person must check what they've done. There must be prompt recording in day books and ledgers of these purchases to avoid, errors of omission. There must be comparison of supplier statements to ledger accounts to ensure there's accuracy. There must be authorization of payments. Now, when payments are about to be made, there must be authorization. Okay, remember again, in times of economic crisis, company may not pay in full. So what they can do, they can simply pay part of the amount there. Still under accounting, there's need for review of allocation of expenditure. Purchases must be properly, classified. There must be reconciliation of payable ledger with total of balances on the control account to ensure there is accuracy. And then the procedures for cutoff must also be followed so that we don't overstate or understate purchases for a given period. So what does the auditor do in this case? It is important that the auditor states that invoices are supported by genuine purchase orders and are duly authorized by the correct individuals. The auditor should inspect invoices to ensure that they are supported by, source documents, GRNs, authorized, priced correctly, coded correctly, entered in inventory records, and they should also confirm that the maths is correct and also that the purchase is posted to the correct account. The auditor must review numerical sequences of invoices to ensure that invoices are duly fulfilled. Remember, at least we can argue for numerical sequencing from the point of view of a particular supplier. Observe also whether the purchase day book is referenced to invoices. This ensures completeness in terms of recording our obligations. All right, so what else do you have? Under tests of controls, you need to review a sample of supplier statements, reconciliation to ensure that company is up to date when it comes to accurate recording of obligation. Inspect control accounts reconciliation for accuracy and completeness. Okay, now we get on to inventory, and under inventory again we've got control objectives. Under recording, we must ensure, the controls must ensure that all inventory movements are recorded and authorized, that all inventories are recorded and owned by the company. Inventories recorded should exist. That is what the controls are trying to help us to achieve. The inventory quantities should recorded are supposed to be correct, and that there must be cut-off procedures, and this must be correctly applied. Okay, now we remember that inventories, are also vulnerable, so there must be protection. So all stock under control objectives should be safeguarded against loss, theft, or indeed damage. Again, we also have valuation. There must be attention to cost system values, which enables us to value inventories correctly. There must be allowance made for slow-moving items. Remember, this could result in overstatement of stock. And also, levels of inventories held should be reasonable. So what are some of the controls that we should see under inventories? Under recording, we have got segregation of duties. Segregation of duties, meaning custody and recording of inventories must be in the hands of different individuals, must be done by different individuals. Goods inwards should be met and checked by responsible person. These are the controls under inventories. Inventory issues should be supported by documentation. The inventory records are supposed to be properly maintained. Okay, what else do we see there? Protection. There must be precaution against theft. All right. Now, this includes restriction to areas where inventory is kept, precaution against deterioration, against the way you keep your stock, environment, perishable products, especially milk, for instance, needs particular type of temperature and a particular type of environment. We need to remember that. Under protection, there must be security over inventory held by third parties. And of course, this requires, regular checks by our clients. And then regular inventory counts must also be prioritized. Under valuation, we must ensure that inventory is valued according to IS2. Inventory must be valued at the lower of costs or net realizable value. And that under financial reporting, we remember that LIFO is to be discouraged. The calculation of inventory values must be, checked for accuracy. Okay, under valuation again, there must be a check on conditions of inventories, and also accounting for waste should be provided for. Under inventory holding, there must be a provision made for inventory levels. Remember, we can't draw below a certain amount, a certain level of inventory without failing to fulfill customer demands. There must be minimum and maximum inventory levels within a company so that we avoid the cost of holding too much inventory and the cost of running out of inventory. Now, let us come to what the auditor does. The auditor must observe and test check inventory counts and ensure that discrepancies are investigated, authorized, and corrected. Then there must be a review of inventory count instructions to ensure that staff have been provided with a copy. Inventory instructions ensures that we minimize the risk of misstating the value of our inventories in terms of, again, value and quantities, of course. Then we need to observe as auditors good inwards inspection, ensure that the inventory that we are paying for at least has been received. And then check sequence of inventory records. Okay, this helps us to ensure that keep track of the company, to confirm rather that the company keeps track of their inventory values, inventory quantities as well. Okay, observe security arrangements for inventories. This helps you to confirm that inventory may not go missing without notice. Then you need to consider the environment in which inventories are held. This helps you to confirm the values of inventory, especially for perishable products. All right. Let us now get on to cash internal control objectives. Under here, we are saying we want to ensure under control objectives all monies received are banked, recorded and safeguarded against loss or theft. We want to ensure that all payments are authorized, made out to the correct payees. We want to ensure that payments are not made twice for the same obligation. Okay, so what are some of the internal controls over receipts? We're still dealing with cash. There must be segregation of duties. At least those who are responsible for receiving monies must not be responsible for banking cash. All monies received must be stamped, the particular dated stamp, of course, and then there must be 2 individuals to confirm the reception of funds via post. Then there must be restriction on receipts of cash. Salespeople are the only ones to handle cash receipts, but I think many companies today are encouraging cash deposits. There must be agreement of cash collections to TILROS to ensure there is the cash received is the physical cash rather is marrying or equal to the book value. There must be prompt maintenance of records. Again, this is a very important point here. All cash received must be recorded, otherwise they'll be under banking or under declaration of cash. There must be giving and recording of receipts for cash. So all cash sales, for instance, must be receipted. Okay, all cash received must be receipted so that when it comes to secularization, it's possible to confirm how much a particular product was sold, service was sold. Okay, daily banking is to be encouraged. Okay, this minimizes loss or theft of cash. Restriction on opening new bank accounts is also very important to minimize the problem of, hectic bank reconciliation. A good number of bank accounts means that you have to do a number of bank reconciliation. Limitation on cash flows is very important to minimize, again, loss of or misuse of cash. Surplus cash counts, very crucial here to ensure that our employees, are not, getting company cash for personal use. There must be safe custody of cash and checks. So this ideally here we must have a safe where we keep our cash and our our checks. And I think that there must be restricted access to the finance departments. Restrictions on issuing blank checks should also be prioritized. Otherwise, the company can lose huge sums of money. Regular bank reconciliation must be prioritized, and I think that this is something that many companies appreciate because you lose money. Daily bankings of receipts should also be encouraged. Okay, so this is a repeat of what I've done. Let me just get on to the next point. Safe custody. Okay, so that has been done. So let me just do this. I think we need to. Okay, I'll correct that later. Let us also look at the issue of check requisitions. Under check requisitions, we are saying certain times when payments are made without supporting documentation, there must be somebody to authorize that. All right. There is what we also call authorized signatories. All checks must be duly signed by authorized signatories. And then there is also prompt dispatch of signed checks. Now, this is very important so that by the time the check clears, there's sufficient funds in our bank account. Payments must be recorded promptly, of course, under payments. Now we are under payments to ensure that all obligations are duly recognized. Cash payments should be duly authorized, remember, in line with budget allocation. And then limits on disbursement according to staff rank. I think this is a very important point. Particular individuals should have limits as to how much they can authorize for disbursements. And there must be rules of cash advances to employees. Who qualifies for a cash advance? Okay, at least somebody who does not owe the company anything. All right. What does the auditor get to do? Observe post opening for cash received via post, trace entries on listing to cash book, paying in book, and bank statement. Of course, these three records must speak the same language. Observe whether cash is banked daily or not. Okay, observe whether cash is banked daily or not. Remember, this could mean if there's no daily banking, this could mean that cash might go missing without the notice of management. Review records for evidence that cash receipts are agreed to TIROS. Again, this is very important for completeness and accuracy of, takings or sales. Review documentation for evidence of agreement of cash receipts from cash book to paying in slip. Of course, this should be done. Review posting to the sales ledger and also the general ledger so that you ensure that there is completeness and accuracy. For cash payments, check that checks are signed by authorized signatories. Check and ensure that these are counter-checked to the source documents so that we don't lose money, company does not lose money unnecessarily. Review a sample bank reconciliation to ensure that this is being carried out properly. There must be 2 signatures on a bank reconciliation. The person who does the bank reconciliation must be reviewed by another person. Observe a cash count. Okay, this is very important. Sometimes you want to observe how much cash is actually there. So a cash count must be observed. All right, I'm now going to payroll, and I'm remaining with capital expenditure, I should suppose. But payroll becomes an important system in any given organization. So under payroll, the objectives of the controls are that only employees who are duly employed by the company are paid. Employees only paid authorized amounts for work done. And then deductions are recorded and pay agrees to bank records. That is your objective there. You need to also ensure that the correct employees, genuine bona fide employees, are paid. You need to ensure that deductions are correct and paid over to the correct authorities. Okay, what are some of your controls here? Segregation of duties, very important. The human resource department should initiate the payroll process, and the finance department should finance the payroll. There must be segregation of duties. There must be authorization of changes and payments. So at the end of the month, payroll inputs must be submitted to the human resource department and the accounts office accordingly. Okay, for joiners and leavers, and of course salary increments and so on and so forth. Password protection for computerized payroll must be prioritized, and that there must be no unauthorized access to the payroll information by unauthorized third parties. Custody of cash for cash payments must also be prioritized. Let us remember that custody of cash for cash payments. That means that cash must be kept safe, away from the reach of third parties, and so on and so forth. What else do you have? There must be maintenance of a salary bank account. I think that companies do encourage their employees to have a bank account to which they can transfer their salaries, and also the company itself must have an account from which they pay out salaries. Reconciliation of accounts must be prioritized, all right? And then so if there's a change in, let's say, your employee's account, that should have the information so that you make the changes. There must be reconciliation of wages cost to payroll records, and so on and so forth, for accuracy tracking. There must be reconciliation of deductions. All proper deductions must be made. If employees have obtained loans from elsewhere, all deductions must be made. Surprise cash counts can be prioritized for payments that are made physically, and so we want to check whether unclaimed payments are still intact. Okay, what is the auditor to do? It is vital to check that all aspects of the payroll is authorized. Amounts to be paid, deductions to be made, payments, net payments to be made are duly authorized. There must be an attendance to cash payouts to observe controls. By you, the auditor, remember that there could be issues of fraud and claimed pay. How does the company resolve those? There must be an attempt to use what we call test data, where you introduce, let's say, dummy information in a system to see how the system is going to process that. You need to review reconciliation to ensure these were properly carried out and that discrepancies were followed up and duly authorized. All right, capital expenditure finally. All CAPEX must be duly authorized. A committee should sit. Remember, these involve huge outlays. The committee should be able to sit to authorize CAPEX. All capital expenditure must be recorded, classified in the financial statements correctly. There must be ordering. Orders for capital items should be authorized specifically. And then we should also make sure that capital expenditure is requisitioned on different documentation. In other words, capital expenditure must not be treated like purchases. Invoices for capital expenditure must be approved by authorized person under internal controls, and this should be coded appropriately. All capital expenditure must be recorded and should be written in the non-current asset register, and this register must be compared to the general ledger amount. All right, should be reconciled to the general ledger. There must be segregation of duties under CAPEX, that is dealing with person requisitioning must be different from the person ordering for these goods. And then next we have got central policy for choice of supplier. Only approved suppliers must be allowed to supply the company with capital items. Now, under test of controls, it is vital that auditors check that all invoices are supported by genuine purchase orders authorized by the correct individual or group of individuals. I want to thank you for listening to this lecture. And as I said earlier on, this was a long lecture, but it is important for us to, exercise discipline so that we get the needed results at the end of the day. So I would like to wish you all the best in forthcoming exams. Get in touch with me. The number is on the screen, if you have got any questions.